All right, let's jump right into a really interesting one today. We're going to be dissecting a company called UGRO Capital. Now, this is a story of just explosive growth, but, and it's a big but, it also comes with some pretty serious question marks. So is this thing a rocket ship ready for takeoff, or is it a high-stakes gamble? Let's find out together.
So, the big question on everyone's mind, right? What's the real upside here? I mean, the bull case for UGRO is, well, it's massive. We're talking a potential 2, even 3 times your money in just the next couple of years. So you got to ask, how on earth could that happen? And maybe more importantly, what are the roadblocks that could stop it dead in its tracks?
Well, it really all starts with this one kind of mind-blowing number. We're talking more than a 30x increase in sales between 2019 and 2025. I mean, think about that. That's not just growth, that's what you call hyper-growth. And this, right here, is the absolute core of the bull case for UGRO Capital.
Okay, so let's pop the hood and see what's really driving this thing. What is fueling this high-speed engine? Turns out it's not just luck. It's a really powerful mix of smart strategy and just super aggressive expansion.
You see, UGRO's growth isn't some happy accident, it's totally engineered. First off, they've got these incredible co-lending partnerships with the big guns. We're talking SBI, Tata Capital, Mahindra Finance. This gives them access to cheaper money and just massive scale. At the same time, they're on a tear, doubling their physical branches to 400. And they're making really smart acquisitions. Take Perfectus Capital. That one move instantly boosted their assets under management, or AUM, by a whopping 29%. And kind of holding it all together is their tech advantage. They've got a patented credit scoring system, and they're diving deep into embedded finance.
And, a growth story like this, it definitely doesn't go unnoticed. When the big institutional players start showing up, it sends a clear signal. You could call it big money confidence. They see the same potential we're talking about, and they're putting their money where their mouth is. Just take a look at who's on board here. The Danish SDG fund, for example, recently upped its stake from 16% all the way to 21%. Now, when you see smart, sophisticated investors not just buying in, but actually doubling down, well, that's a pretty powerful vote of confidence in where this company is headed.
But of course, it's not all sunshine and roses. Every high-growth story has its risks, its hurdles. So it's absolutely crucial that we flip the coin over and take a hard look at the potential red flags.
Okay, the first thing that really jumps out at you is the promoter holding. It's sitting at just 2.2%. Now, in this sector, you'd normally expect to see something over 10%. So what does that mean? Well, for a lot of investors, it raises that classic question about skin in the game. You're putting your faith in the management team and the big institutions, not so much in a founder who has a huge personal chunk of the company on the line.
All right, next up, profitability. And this is where things get a bit tricky. While their sales are absolutely exploding, their net profit margin, or NPM, has actually been squeezed. It's dropped from around 12% down to 8%. The main culprit here? Higher borrowing costs. And we saw that in the latest quarterly numbers where profit took a dip. So the billion-dollar question is, can UGRO actually turn all that incredible sales growth into real, hard profit?
And there are a couple of other things you've really got to keep an eye on. This company needs to keep raising money to fuel its growth, and that can dilute the value for existing shareholders. Also, a huge chunk of their loan book, 70%, is unsecured. Now, their gross non-performing assets, or GNPAs, are stable for now at about 2.1%, but believe me, that's a number you have to watch like a hawk.
So, where does that leave us? We've got this incredible high-growth engine on one side and some very real, very serious risks on the other. The big question is, how does this all shake out when we look at the company's valuation and what it could mean for the stock price down the road? Okay, now this is where the story gets really, really compelling. If you look at its price-to-earnings ratio, or PE, UGRO is trading at about 11. Now compare that to the rest of the sector, which is typically somewhere between 20 and 40. So put simply, even with all this crazy growth, the market is basically saying, we're not totally convinced yet, and is valuing it at a huge discount compared to its peers.
And that valuation gap, that is the key to the 2x, 3x potential we talked about at the start. The whole bull theory is pretty straightforward. If UGRO's management can just execute their plan and hit their targets, the market could re-rate the stock, meaning it'll start valuing it more like its peers. Just imagine for a second, what if their earnings double and their PE ratio doubles? Bam! That's how you get a massive jump in the stock price.
So, what's the bottom line here? After looking at all this, what's the final verdict? Let's boil it all down into a clear, actionable game plan for anyone thinking about investing. All right, so if you're interested, how should you play this? The general thinking points to a 3-step approach.
Step 1. You have to think long-term. We're talking a 3 to 5 year time frame here. This is not a quick trade. Step 2. Think about buying in slowly, maybe in a sip mode, especially when the price takes a dip. And step 3, and this is the most important one, you've got to do your homework. Track those quarterly results like your life depends on it.
So what exactly are you tracking? Well, there are pretty much 3 magic numbers here. First, AUM growth. Is that engine still firing on all cylinders? Second, net profit margin. Are they actually making money from all those sales? And third, GNPA. Is the quality of their loans staying strong? Honestly, those 3 things will tell you pretty much everything you need to know about whether this growth story is on track or derailing.
Which brings us right back to where we started. UGRO Capital. Is it a high-growth engine or a high-risk gamble? You know, the answer really comes down to one word: execution. The potential for a huge return is absolutely there, but so are the risks. That path to a 2x or 3x return, it exists, for sure, but it's going to require some brilliant driving from the company and a whole lot of attention from anyone who decides to come along for the ride. Thanks so much for tuning in.